wrap of the trading session today. Very uninspiring, largely range-bound markets. I think what I was noticing earlier on in the session was that the movement was best defined, I feel, especially in the European session, by gold over here. And you can see very choppy, range-bound price actions, just grinding for highs, trying again, but ultimately defined by yesterday's price action. And really, the volume mainly picking up around the afternoon session, around 2:30, where we started to see a bit of reversal coming off some of the best levels in gold, just recently taking out the pivot level, coming in to today's low. So I feel like if I was to summarize today's price action, it would largely be defined by gold this morning, and just seeing a little bit of dollar strength coming into this afternoon. Now, this is very much to be expected given the fact that we have the FOMC meetings later on this afternoon. Largely going to be a non-event, I feel. These are, of course, the minutes for the previous FOMC meeting, which was back in September. So this is going to be discussing some of the matters which are being discussed by the FOMC members. Let me just transition across to talk about inflation a little bit. Of course, the Fed, we've been speaking about this over the past few months. There was that very sharp and steep fall in inflation from 2.7% down to 1.6%, and started to see a bit of a recovery, now stabilizing around 2%, no real violent rises. So I feel like the Fed is now going to be a little bit, you're going to see a hawkish tone, and this is reflected by what we saw in the last FOMC meeting. But conversations regarding the shrinking of the balance sheet and the normalization of that process. In terms of their inflation forecast, I don't feel like anything would have been revised lower, and we saw that in the dot plot matrix, which is primary reason why we saw the markets react quite hawkishly on the back of that. So this sort of defines why we saw such choppy price action. If we look at cable, there was an interesting level, which actually I got short on just yesterday, which was, just this level here, 1.3250. Good entry for a short. Given the fact that we were seeing sterling weakness coupled with dollar strength driving the market down, and that trade, as you can see, was very painful, grinded, and ultimately cable has maintained itself in quite a tight range here today. Again, some failed breaks here, coinciding with sort of the moves we were seeing in gold earlier on in the morning. So the outperformance of today was most definitely the euro. As we can see, not a remarkable move, but still we did have a trend, and it was actually quite steep coming into this afternoon, where we were grinding higher and higher and higher. And anybody who was watching this, we actually saw a bit of a stop run in this asset class based on this level just here. And this level just here. So as we grinded higher, we saw a very slight stop run, just a technical push above these levels here, ultimately finding resistance at the 1.9 level, and once again entering into a range-bound market. This outperformance has been due to the sort of market's fears surrounding this immediate and quite abrupt independence vote from Catalonia, and that fear has seemed to have diminished. I wouldn't say it's conciliatory tones from either side, but definitely a cautious tone being taken by both the leadership in Catalonia as well as Spain, where there's no imminent need to trigger independence, and it looks like it's going to be put off for a couple of weeks. In terms of the equity space, this resulted in a sharp turnaround in IBEX, which is the Spanish index, equity index. This was again led by the financial services sector, and as we were discussing earlier on in the week,
has lit the wick of war, according to the
wick
North
of
Korean
war.
Prime Minister.
Okay, just North Korea rhetoric. As I was saying, so the outperformance was in the financial services sector. There was going to be some substantial disruptions in that industry had Catalonia rushed to trigger independence. This would have led to certain financial institutions moving their headquarters out of Catalonia, and that sort of uncertainty nevertheless would result in at least a near-term dip in the equity valuation. So these fears sort of starting to subside, this concept that they're now going to negotiate, giving the market a bit more time, a bit more hope that there's nothing abrupt going to be done, allowing IBEX to just reverse and seeing some positivity in the euro as a whole. But once again, we're now here in this sort of range-bound area. I don't expect the market to move much, given the fact that 7 o'clock is the real risk event. In terms of other movers for the day, the oil market, really nice technical trade. We had the OPEC monthly technical report out today, which is, as always, not a huge market mover. Let me just bring up the oil chart, which is here. The main takeaway from the OPEC report was the fact that compliance was now at a 98% compliance rate in OPEC members. This is actually quite high. It was around the mid-80s only about a month ago. So this, I feel the market shrugged off, given the fact that we're trading at quite elevated prices already. We really have been tearing higher since maybe the beginning of September onwards, trading above 50. In the OPEC report, they also expected oil to range between $50 and $55 for 2018. My comments on that is that's extremely unlikely. I think with the oil market, something to keep a close eye on now is the DOE reports, which the market has generally been shrugging off, given the fact that we had the hurricanes sort of causing anomalies in the results that we were seeing. I feel like if I was to speculate, but not position, I would say that we're going to see an increase in US output production once again tomorrow with the DOE. And that's going to result in a bit of normalization. I'll be very surprised if oil can maintain itself above $50 this week and in the coming weeks. But in terms of the trading setups today, really interesting level was tested in the oil market today. And I know some of us were getting short. Just around here. So if we look at the technical setup of this trade, and I'm sure just like me there's plenty of bears in the market at the moment who would have been looking for a point to get entry. Now we're sort of defining the bottom of the previous range, coming in line today. So a good technical level, coupled with the fact that it was a trade which could have been taken with sort of astute risk management, given the fact that it's close to 51.50 and the R1 level, means a lot of traders have been looking to get in here, and given the fact that we had your R1 and your 51.50 level just above, and this resulted in quite a clean move to the downside. In terms of the resistance that the market found, 50.80, providing some near-term support, and this is due to the fact that it was defining the top of the range in mid-September around here. So the top of the range being defined by 50.80. So technically I think that was one of the best products today to trade, selling off, finding support, ultimately breaking through, and we're just testing that level as we speak. With regards to the DOE, everything has been pushed forward, as we know, given the fact that there was a bank holiday. It was Columbus Day on Monday in the United States, which means the API data, which comes out on Tuesday, is now going to come out on Wednesday, and the DOE, which was traditionally comes out 3:30 on the Wednesday, is now being pushed forward to 4 o'clock on the Thursday. So that's going to be something to keep a close eye on. Otherwise, the data calendar has been relatively quiet. Let me just pull up a data calendar here. Nothing particularly coming out. We had some Spanish inflation numbers. They came out in line. This afternoon, at about 3 o'clock, we saw the JOLTS job opening. The employment industry in the United States staying relatively unobserved recently, given the fact that we're tracking around 4.2, 4.3% in unemployment. This is actually another factor which may come out in the minutes. The fact that unemployment is so low in America and why that hasn't filtered through into the inflation story. But otherwise, data calendar's been very quiet. Apart from our speakers, we had Fed's Evan speaking, who was a soft dove, which is quite important to note. As a dovish member, speaking on economy and monetary policy. So very relevant, but when we're talking about commentaries coming out of Fed members, be it from the ECB or the Fed, their stance is one of the most important things to remember. He was a dove, and in line with his dovish stance, he sort of went on to say that we should, let me just get the exact quotes up here. Fed's Evan says that I think we have to wonder if we need a little bit more accommodation to get close to 2.0%. So this is whilst the Fed is on a hiking cycle and shrinking the balance sheet. So a dove coming out and saying something I feel actually slightly more than just a soft dove here. So we did see a bit of dollar weakness supporting the euro. This coupled with the fact that it says there is room for honest discussion later this year whether it is the right time to raise rates. So this just again supported your FX pairs, allowing Eurodollar to maintain itself above R1, but in line with his personality. So market generally quite muted response to that. Looking at the rest of the day, just discuss the FOMC minutes plus the API weekly crude oil inventories coming out at 9:30 tonight. That will set us up quite nicely for the DOE report tomorrow, which I'm quite excited about now that we're seeing the normalization in the United States as a whole. Okay, guys, thank you very much, and that's your European wrap. Let me know if you have any questions. Guys in Bahrain, please feel free to drop me a message. I'm sitting on AC's desk, so you can message me there. Thank you very much. Have a good evening. Cheers.